You are listening to the Coinist Podcast.
One of the things that
Yeah.
you guys put out that caught my eye was you trading exactly one of these opportunities. It was I think it was a 7,000 Bitcoin seller on Binance.
Yeah.
It was a week or two ago, and it pushed them. I think the Bitcoin price was, per the video, and I was also watching it live, sitting here at my screens, like 2% below the rest of the exchanges, which isn't a lot, right? Some people are listening and saying, "Oh, 2% is whatever." But 2% on an exchange like Binance versus BitMax and Bitfinex, and
Right.
sometimes there's a slightly different price based on Tether or whatever it is. But that was a pretty big discrepancy. And in the video, you're talking about, look, how much money do we have on Binance? If we're already long or short somewhere else, can we just kind of capture? Can we stay neutral?
Right.
Can we get enough money to Binance? Can you kind of walk us through or walk me through and everyone else what was going on there?
Yeah. Yeah, absolutely. And just to address your point, is 2% a little or a lot? It depends on how big you're doing it. And the cool thing about this was it was $100 million. So if you could actually make 2% on $100 million, that's a lot of money. And then the question is, well, how much can you do? So what happened was someone sold, 100 million bucks of Bitcoins on Binance. And the way they did it was they just did it. They're like, here's our Bitcoins, we're selling them now. So they placed a giant offer, they sold some, they stepped the offer down, they sold some more, they stepped the offer down, they sold some more. And Bitcoin's crashing because of this guy, but it's crashing more on Binance than anywhere else because there's a giant seller there. And what we want to do is just lift his entire offer and hedge by selling in some other places and have made a lot of money. But we can't do that because we don't have 100 million Tether sitting on Binance. And again, because you can't net out across exchanges, so you can't do large margin trades, et cetera. You can't just, even if you think you're hedged, you can't just lift this. So, what were we thinking there? Well, one thing is like, we want to figure out when we want to buy this. Eventually we decided it was time to buy. Is that sort of a low enough price that we thought we were just going to be able to hedge it, make money on the arbitrage? But in order to do that, we needed Tether there, and we spent all of our Tether lifting the first piece of this.
Yep.
And so we're kind of frantically, collecting all the Tether that we could, getting it over there, thinking about things like, okay, like we want to be sending, it's now ERC20 Tether, which is faster, but like it's not whitelisted from this place to Binance. We can't send directly from OKX to Binance. We got to route through this third place. That's going to add on another 20 minutes and, margin account here and like, all these different things. And so, one part of this was us kind of scrambling to just like get all of our assets in the right place. And then on the back end, of course, we need to hedge this. There's a lot of Bitcoins which we were trying to buy, and we had to be very like, all right, if we start buying these, we got to find a place to sell. Where are we selling? What's the best place to sell? Where are we going to be able to get enough size off? Where's the best price? Do we have enough capital there to be able to do it? Like, do we need to be, shuffling capital around on that end? And then, the third thing that we're thinking about is what's a Bitcoin worth now? Usually it's easy. Just look at Coinbase, and that's pretty close. Maybe it's off by 3 bips or something. Right now, Binance is 2% below everything else. So I don't know what Bitcoin's worth, Is it worth a Binance Bitcoin? Is it worth a Tether Bitcoin, a Coinbase Bitcoin, a future Bitcoin?
Exactly.
Like those are all really dislocated. And so, separately, someone comes to us OTC and they're like, hey, we'd like to buy a Bitcoin from you. What price do we sell it to them at? I don't know. It's pretty ambiguous. And of course, we're in competition with other people for that trade. So we're trying to guess, like, what's the world think a Bitcoin is right now? What do we think it is? Where are we quoting this? And that obviously depends not just on the current prices, but on what the fuck's up with this guy.
The other thing that caught my eye and why I put so many of these puzzle pieces together and was so interested in having this conversation was Alameda is in the top, I think they hold 2 positions in the top 10 in terms of the BitMax leaderboard, which a lot of people pay attention to. Those positions are like 5,200 and 1,600 Bitcoin notional profit, which I don't know the exact numbers. It's somewhere between like $50 and $70 million. Are you guys, is BitMax primarily where you were trading before? Is it a lot of Binance or kind of what's the story there? And then the other side of it, it's really this, it's really the same question as your Binance trade of why have that there? Is it what's kind of the incentive
What's
there?
It doing there?
Yeah.
So to answer the first question, and we trade a bunch there, but it's not the only platform we use. It's not a dominant one. It's one of the top ones. I think it's one of the top 3 or so by volume for us, but it's not an outlier. We're again trading on 30 or so. I think the bulk of our volume is on 7 platforms or so,
Okay.
of which BitMax is one of them, but not a dominant one.
Okay.
And So we obviously do use it a bunch. We also have some other accounts there. Maybe even some other in the top 10, I think, which are not actually revealed. But
If they are, they're still using default names. That the biggest question was like I saw one Alameda
right.
and then I saw
Yeah,
Alameda at Gmail,
that's
so I
right.
was like,
Yeah,
those have to
we
be
have
you.
two
Okay.
that
Public.
we've turned to real names.
You're one of the only analysts I've seen. So we were just talking, another 6 years out or so. You're one of the only analysts I've ever seen that publishes a 10,000 year view for Bitcoin. Can you break that down? Because it's one of the coolest charts. I'm going to pull it up for all the viewers here on YouTube. For everyone else, we'll explain it. But what's the 10,000 year view for Bitcoin? I've never seen someone project that far out, but it's actually fascinating in looking at how fiat money relates. So what's that about?
This is a tip of the hat to Stuart Brandt, who's head of the Long Now Foundation. They like to take a 10,000 year view of history. And I really like that kind of, we're so hyped, yeah, even. But like to think about things in the long view is probably under practiced. And so like it was dwelling my head for a while to zoom back of where we sit in cryptocurrency and the greater backdrop. And of course the greater backdrop of crypto is money, right? And money's been around since civilization has been around, which is roughly 10,000 years. And so when we look at civilizations, we really have to look at the great ages, right? We went from hunter-gatherer to the great first agrarian age, which brought the original villages and cities, and then we had the Industrial Revolution, which created a much more complexity of life, and then now we're undergoing this big, massive transformation into going into the digital age. So we're in the post-industrial revolution, and so like where do we sit with this? Is we've always had like precious metals, not always, but like I believe for 6,500 years we've had precious metals as being the token in which we had that backed scarcity. It was hard to print more of gold, silver, copper, and so when we went to the Industrial Revolution, civilization became a lot more complex, and you can see we went onto the gold standard. We traded paper notes, which could circulate faster. We could expand the money supply, but still be tagged to a measure of scarcity around that gold locked up in vaults. And that was the money of the industrial age. And when I look at where we are right now with going through the internet, and you look at all the largest companies in the world, they're all digital. It's the Google's, Facebook, it's our FANG stocks, Facebook, Apple's. And the interesting thing about it is that until Bitcoin, we never really had anything on the internet that could be scarce. So and that's how I describe Bitcoin to people, is that let's not get into the technicals of how it works, but really someone just figured out how to make a internet scarcity. And so we're going through this phase where we're learning to trust it, and it's proving to be a store of value, and it's natively digital. And once we have a natively digital store of value, that can be transacted on the internet via code and programmable. And so when you have something that's native to the internet, that's a digital age money. And so that chart that picture really just shows that long-term trajectory of, if you want to zoom back or zoom forward in the long arc of it, if we're in a digital age, we really want a digital currency, and this is our first internet native digital currency. And so I think I said bankers say it's a bubble, technologists call it a disruption, but students of history would call it the dawn of the digital age. And that pretty much summarizes that chart.
you've seen your business go from 2% crypto to, almost 80%, now drop back down to 10%. A lot of people are speculating and wondering whether or not the bottom is in. April, we saw this massive pop in Bitcoin's price. Are you seeing numbers increase on the volume side? Are you seeing crypto accounts get opened? What are you seeing on the back end? That's kind of a different metric that I think people can consider.
One is we've seen volume more than double over the past 2-3 months. That might be a good sign for a bottom. But again, I think there are some externalities that could happen to sort of break the market again, potentially around Tether, around sort of the indictments there and what's happening there. That's a bit scary. I'm not big, so I've been a trader since I was 13. But my view is always sort of choose an asset long term, believe in it long term, and then trade in and out. But first, sort of decide on sort of your macro decision. We'll see Bitcoin reach all-time high again. I'm assuming that's not surprising coming from a Bitcoin zealot, right? I think all of us believe that. But I think it's important to understand that it's not necessarily about sort of, whether the bottom has been reached 2 months ago or whether there might be something in the next 2 months. Most people around the world are still significantly underinvested in crypto.
So many poker players, it seems, or at least the ones that I've talked to, it's like they stumbled across crypto because they had to be paid out in it a couple of years ago, and then 2017 happens, and now all of a sudden they have this massive amount of Bitcoin, or because they understood probabilities and it was kind of a similar game to play. So how'd you get into crypto, and have you seen that as well among your friends or among the poker community? How did most people get in here? Why is there such a large poker community and crossover in crypto?
Sure. So for those of you guys who don't know, there really is, what you're saying is true, that there's a very large crossover of poker players in crypto. In fact, if you're a poker player, at some point in the last few years, you had to decide, like, are you on the bandwagon or not? And so when you bring up cryptocurrency in the poker world, it's a very decisive issue. Like, half the table will love it, half the table will be like, I swear to God, if you say Ethereum again, I'm going to kill you. It's like, it's real hit or miss, right? But a lot of the people really jumped onto it. And so for me personally, at least, I was fortunate to kind of get involved a little bit on the earlier side. Kind of, I think early 2014 or so was around when I got involved. And I forget like what the exact moment that I learned about it was. It may have been that some online processors were already starting to think about Bitcoin, or I know that there was a poker site called Seals with Clubs that was the first one to accept Bitcoin. It was a Bitcoin only site. But basically, because money is so important, liquidity is so important when you're a poker player, being able to bring money to whatever country you're in or whatever site you want to play at, it's important to have money, that isn't kind of tied up through conventional banking and all that type of infrastructure, because it's slow, they can confiscate it, all these issues, right, that as a poker player suck. And so when I first started to hear about it, I read about it on the forums, online, people talking about it. And I forget if like maybe the first time I purchased it was something poker related, or maybe just having heard about it, I got into it. But basically, the community started to talk about this a long time ago. This is not something that's like new within that community. Now, for me specifically, around the same time, I started to learn about the dice sites, which were like, Just Dice, I think was the first one by Douglas back in the day. And then Satoshi Dice, I think was around like in the same time frame. Since then, there have been tons of different dice sites. Now, for those of you guys who don't know, basically the way the dice sites work were people would provide the bankroll, and then the site would would allow gambling, and then the investors who put up the bankroll would get a cut of the profits. So basically, you got to be the house. Now, as a gambler, I've never gotten to be the house, and this was pretty exciting. All of a sudden, like, I could actually be part of like the casino administering the bets or whatever, or at least supplying the liquidity to administer the bets. So basically, I put bankrolls onto these sites where people were gambling Bitcoin back and forth, and essentially, I actually had an edge being part of the house. So that's kind of like the first reason I bought like any real amount of Bitcoin was to be the bankroll on the sites. And that's kind of got me started, man. I made some through that. And then that kind of like, I was on more of those sites. Before I knew it, I was kind of really involved. And then during that process, the price started to rise. And I hadn't really thought about that. Like I just thought about like sort of this whole economy of being able to invest in the house and the liquidity side of it. And then the price started going up, and I was like, oh, you can make money like that
This is
too.
sweet.
And yeah, that's kind of how it happened for me and how I started to get involved. I know several other poker players got involved for a lot of the same reasons, just being able to back these dice sites. And I think as a professional gambler, when you see the opportunity for edge, right? Because edge is so important in gambling and probably in trading as well, right? You want to create edge. And so when you're used to like, how can I get an edge when I'm betting, and you see this opportunity, then you kind of step over. So as far as, that's my background with it. But as far as the community goes, I think that's how the poker community first started to get their toes wet, to dip their toes into the pool with Bitcoin and things like that. And then once it really started to surge in 2017, like everyone in the poker community specifically was talking about it, and a lot of them started to get involved kind of it had been around for a while, so they were familiar with it. And another great thing about the poker community is that they're very willing to take risk. Yeah. And you need to be willing to take risk if you're going to get involved in this space. So that's kind of like the perfect storm, right? You have this group of people, they need liquidity. They don't like these institutions. They're willing to take risk. They're looking for edge. I mean, this is really kind of why it lends itself so well, poker over into Bitcoin. And I have a quick story that I wanted to tell. This is when I should have known that the peak was in. Okay, this is the moment I should have known. It was January of 2018. Maybe it was February, but it was in that time frame. And I went to the Rio. And for those of you guys that don't know, the Rio is the home of the World Series of Poker. Okay, this is the home of poker. And I went to the valet and I pulled up, and the guy said, "I know you." And I was like, yeah, I play poker. He's like, "Oh, no, I don't follow. You're the Bitcoin guy, right?" And I was like, "We're in trouble."
Oh, gosh.
We're in trouble if I'm pulling up to the World Series of Poker home central base and I'm the Bitcoin guy. We got problems here.
Regulation is trying to put these things into certain bins. You also have investors trying to put these things in certain bins. With that value capture piece and thinking about middlewares, you have broken down these assets into monies. Some of them resemble more commodities, and there's also commodity monies. What's kind of your new thoughts on value capture there? Why you're splitting those separate things apart?
Sure. Taxonomy's been a long journey because the new asset class white paper in 2016 with Coinbase was kind of the first time to put out such a bold claim, and we actually got laughed at by a lot of people at the time because BTC, I think the whole space was still around $10 billion in total value. And it was like, how could this be a new asset class? But the reason I bring that up is because at the time I was younger, not that I'm old now, but I feel like when you're younger, you want everything to be new, and you want to be the one to say that I did the new thing.
Sure.
And as I've gotten older, and maybe crypto has aged me more than most industries would, I've more and more come back to this idea that there's little that's new under the sun. And so with the value capture and quantification piece, I worked to fit crypto into an existing framework of super classes of assets, which was put forth by Robert Greer in the 80s or 90s. And that framework has 3 super classes under which most of our traditional assets fall. And so there are capital assets, which give you a claim on something of value or value flows. And so this would be equities, bonds, income producing real estate, and also stake-based assets, stake-based crypto assets, which is kind of what I was alluding to before. So that's capital assets. You then have consumable and or transformable assets, which you can directly consume or you can transform into something else. And so this is oil, wheat, natural gas, more of our traditional commodities. Gold would fit into that bucket. The third superclass are purely store value assets. There's no claim on value flows, so it's not a capital asset. And there's no direct, the value of a store value asset does not come from its ability to be consumed or transformed. And so this would be art or, say classic cars that aren't driven. And interestingly, gold would also fall partially into the store value bucket. And this is where we have some assets historically that have crossed both consumable, transformable, and store value. and gold is the best example. And I would say Bitcoin fits into that as well.
Okay.
Because Bitcoin's proof of work, it makes it such that you don't need BTC in order to mine BTC, right? And so really holding Bitcoin doesn't give you a claim on anything. So it's not a capital asset. We can rule that out. But it is a consumable, transformable asset. It basically gives you direct access to the utility of Bitcoin's ledger. And it is also a store of value asset. And the store of value component is really what gives Bitcoin this tremendous financial premium. And so I would argue that most proof of work assets are just going to end up being consumable, transformable. They'll suffer from the velocity problem. They likely won't accrue that much value, just as most commodities don't end up accruing all that much value. Now, the proof of work based assets that also come to be seen by the public as a store of value will accrue significant sums. And so for me, the most credible plays in the market today are Bitcoin, Decred, and Zcash, just in terms of robustness of the protocol, quality of the engineering, sustainability of continuing to evolve the protocol, social acceptance, all those things. So that's kind of, say, the existing world and fitting within things that we've seen before. What's really quite foreign are assets that overlap between a capital asset and a consumable transformable. And so these would be things like, for example, ETH 2.0.
I look at the dominance chart for Bitcoin, and you see obviously it dropped to something like 40 or 30% over the course of late 2017, early 2018, and now we're on a course back to rising towards 85 and 80%. But infrastructure-wise and structurally, the market is much different. Now there's tons of new protocols that are building smart contracts. There's so many more teams building. There's so many more tokens being launched. So I've battled with the idea of, is dominance going to go back to where it's historically been averaged at 80 to 85%? And 2017 was kind of a wake-up call to, okay, there shouldn't be that many protocols like that. Or what you just said is kind of making me go back the other direction of, no, it's just going to be kind of a rebound effect of, look, it does kind of Bitcoin has to lead us out of this bear market. It has to suck liquidity from some of those crypto assets, but there will be this kind of delayed effect of smart contract platforms and new products that are able to hit the market at a much faster rate and at a much cheaper cost. So that's kind of a cool idea to go back and forth on. It's a push and pull.
Yeah, that's my view. Now people are going to say Chris is a venture capitalist, and he has a vested interest in saying that. But I think that's something that at least for newer maximalists, some people forget that I was the first buy side analyst to cover Bitcoin. I've always had strong affinity for Bitcoin, on a personal and institutional basis, right? And so I am not at all talking about a lack of conviction in Bitcoin. It's really just talking to the explosive amount of talent really that is going into assets outside of Bitcoin. And Bitcoin in dollar terms, I think actually benefits from that, right? Even if it loses share in the dominance index is just one index of many that we have come up with in the space. Yeah.